What's going on? Hi, everyone. My name is Weston Priest. I'm here with an important update. We're going to go over some of the tax bill provisions from this new big, beautiful bill, what they're calling it. The sweeping legislation just passed and includes a number of permanent tax changes that could impact both individuals and business owners in a big way. So let's break it down. For individuals, number one, the permanent extension of the TCJA individual tax cuts. One of these biggest changes, the 2017 Tax Cuts and Jobs Act, which was set to expire in 2025, has now been made permanent. That means the current individual tax rates and income brackets are here to stay, along with the higher standard deduction. Number two, the child tax credit has increased. The child tax credit has been bumped permanently from $2,000 to $2,200 per child. Even better, it will be adjusted for inflation after 2025. The refundable portion, currently $1,700, is also locked in and indexed going forward as well. Number three, the SALT deduction cap is raised. The cap on the state and local tax deduction, often called the SALT cap, is now $40,000 for individuals or households earning under $500,000 a year. That higher cap will be indexed for inflation until 2029, and then it drops back down to $10,000 unless renewed. Number four, tips and overtime deduction. So here's something new. If you earn less than $150,000 and you work in a job where tips or overtime are common, you could now deduct up to $25,000 of that income. This is a temporary provision, though, and it's set to expire in 2028. Keep that in mind. Number five, the senior deduction. The seniors earning $75,000 or less will now benefit from a new $6,000 deduction. This is available regardless of whether you itemize or take the standard deduction. So that's a nice boost for older adults on fixed income. Number six, the estate and gift tax exemption has been raised. The lifetime estate and gift tax exemption has been permanently increased to $15 million. So starting in 2026, this will be indexed for inflation moving forward as well. And that's big news for those of you who are doing estate planning. Number seven, charitable contributions. There's more flexibility now for those who give. There's a few wins here. A new above-the-line charitable deduction of $1,000 for single filers and $2,000 for joint filers is now permanent. There's also a 0.5% floor for itemized charitable deductions, meaning only gifts above that floor will count. So keep that in mind. Number eight, almost done with this individual list. The mortgage interest rate deductions are made permanent. The limit on mortgage interest rate deductions up to $750,000 in principal is now permanent. So that's good news for homeowners in the higher cost areas. And the final one for individuals is the alternative minimum tax, or also called AMT, the AMT exemption. The AMT exemption increase is now permanent too, and the income phase-out thresholds are reverted to more favorable 2018 levels. This is indexed for inflation as well. That means fewer people will be subject to the AMT moving forward. For businesses, now we're going to move from individuals to businesses. There's a few of those on here. Number one is full expensing. So bonus depreciation is reinstated. Businesses can now immediately write off 100% of the cost of eligible equipment and short-lived assets. This full expensing is permanent and it is effective January 19th of this year, 2025. Number two, domestic research costs expensed immediately. So companies can now fully deduct research and experimental cost incurred in the U.S. rather than amortizing them over time. This applies retroactively sorry, my voice cut out there a little bit. actively for some businesses. It's a big incentive for innovation here in the U.S. Number 3 is the business interest rate deduction rule is relaxed. The old limitation capping deductions at 30% of EBIT has been rolled back. We are now returning to a more generous 30% of EBITDA, the standard, meaning depreciation and amortization are added back in when calculating how much interest can be deducted. And the fourth and final one on our list for businesses today is the Section 199A deduction is made permanent. The 20% deduction for pass-through income under Section 199A, which applies to S Corps, LLCs, and sole proprietors, is now permanent. So that's huge for small business owners, professionals, and entrepreneurs. So in closing, these updates will affect nearly every taxpayer business in the U.S. So now is the time to review your tax plan, make adjustments, take advantage of these new rules. I'm not an accountant, so for tax advice, you need to seek a CPA or somebody who deals with taxes. But if you do have questions on how this bill impacts you or your family or your business, give us a call. We can put you in touch with CPAs and tax planners. And we will discuss any of your financial stuff that this impacts. So thanks for watching, and I'm going to go into detail on a lot of these, or each of them individually. So check out some of our other content. I hope you got something of benefit out of this, and hopefully we'll see you soon. Thanks.